How do you know if you are a trader or a gambler in the stock market? One of the main differences is self-discipline. A trader has strong self-discipline and a gambler has almost none. The lack of self-discipline is a direct reflection of the lack of emotion management, and there's no way you can be successful without any discipline. Here's an example of how a lack of self-discipline destroys someone's trading account. I shared with you our Costco 500 call trade in a previous video. We made a huge profit and ended up rolling some profit into July 15 515 call for around 330. As my standard trading process stated in the trading guide for the trading room, I only use a small portion of my profit to roll and treat it as a lotto without a stop loss because it's on house money. Even if it goes to zero, I'm still keeping the majority of the profit. So someone in my trading room made a deadly mistake. The person rolled the entire profit from the 500C and a lot of principal into 515C, meaning the 515C trade was more than double the original 500C trade. So Costco pulled back with the market. 515C lost almost 70% of its value. Because of the precision size, the person had to take a huge loss and blew the account. However, on Friday, Costco rallied off support. 515C hit a high of 910, giving our roll a 176% profit. At the end, we locked in around 17,000 in profit from the first and the second round and rolled a third time with some profit. But unfortunately, the person could not join our celebration. That's why even with the same alert, some people were able to grow their account and some just blew theirs, because some people are trading with self-discipline and some are just straight gambling. If you liked the video, do share it with other people. If you want to trade with me live, visit my website, paxistrading.com. Thank you for watching.